Good afternoon, everybody. I'm Lynn Rubenstein. I'm the Executive Director of the Northeast. Oh, Lawrence, look at that. I made the exact same problem that I said with you. Rubenstein, I'm the Executive Director of the Northeast Recycling Council. I'm so delighted that you're with us today for this webinar co-hosted by NERC and NMOA, Jobs and the Economy, Recycling Economic Information Studies. With me today, in addition to our speakers, is Terry Goldberg, the Executive Director of NMOA. Some housekeeping. First note, please note that this webinar is being recorded. The recording will be posted on the NERC and NMOA websites, as will all of the PowerPoint presentations. They will be posted on both of our websites as well. You will get an email tomorrow from GoToWebinar with the link for that. I would like to thank our sponsors, silver sponsors, Quantum Biopower, Tomra, and Vanguard Renewables, and our bronze sponsor, the Mattress Recycling Council. The way we're going to run this thing is that we're going to hear from all three presenters. I'm going to do their bios in a few seconds, but we want you posting questions. Definitely post questions. And Terry from NMOA will be moderating that section after all the three presenters have spoken. So if you don't know how to do that in GoToWebinar, on the right-hand side of your screen, upper right, is either a dashboard, drop-down box where you can see in a gray bar questions, and you do the little gray arrow down and you type it in and hit return. If you're not seeing that, you are seeing a little orange arrow. So you just click on that orange arrow and that will open up the dashboard where you will then be able to post questions. And as I say, we're not going to be taking questions during the presentations, but once they're done, we will have a question and answer period. I want to note that there is a handout available. One handout, it's a PDF with links in it of other recycling, including these, recycling economic information studies from around the country, and national links to the speakers' studies are also included in that. So that'll be available throughout the presentation and will also be posted on the NERC and the NMOA websites. So
and that link is not working.
Really? That's too bad.
Yeah. So maybe you need to repost it or something.
I don't think I can do that, but it will be, well, if I can do that while things going, I will. I bet I can't. Choose a file. Let's see. Well, anyway, it looks like maybe I can. So I'll do that after I'm done doing the introductions. Thanks for letting me know that, Terry. So the first presenter is going to be Brett Biggers. Brett is a senior economist at ISRI. He collects, analyzes, and disseminates information on recyclable commodity trends. He is the staff liaison for the paper division, plastics division, and the MRF committee. Other efforts Biggers works on is the ISRI specification circular, the recyclability protocol, trade committee, and markets asset working group. He basically knows it all. Brett has addressed economic, markets, and sustainability issues throughout his career, writing articles and producing reports. He has also worked at the National Waste and Recycling Association, Flexible Packaging Association, and consulted in the trucking, chemical, and specialty printing industries. Following him, we'll hear from Lawrence Stoppelt. Lawrence is an economist in the Environmental Protection Agency's Office of Resource Conservation and Recovery. He joined EPA in 2020 and contributed to the most recent Recycling Economic Information Report, as well as the Facts and Figures Report. Other work at EPA includes outreach for establishing strong domestic recycling markets, research on recycling measurement methodologies. Prior to joining EPA, Lawrence worked as an economist at the U.S. Bureau of Labor Statistics and spent a year with the U.S. Senate Finance Committee's tax staff. He has a BS in Business Administration and Economics from Chapman University and a master's in public policy from Georgetown. And our final speaker will be Yuri Freeman. Yuri is a principal at RRS. He utilizes over 15 years of solid waste and recycling experience to provide technical, strategic, and communications client support. Yuri draws from his former experience as a recycling program manager in the public sector, including overseeing and growing residential recycling and composting programs, public school, K-12 collections and education, facility operations, and employee engagement, all within the confines of limited budgets. Past consulting projects put URI at the forefront of zero waste planning, forecasting and modeling, outreach campaigns, sustainability program evaluation, and stakeholder and public process engagement. URI has previously served as the president for the Colorado Association for Recycling and chairman of the National Recycling Coalition. So quite a distinguished group of panelists. So with that, I'm going to make Lawrence the presenter. Let's see. And change presenters. Excuse me, not Lawrence, Brett. I'm distracted by switching this handout. Okay, Brett, you are going to be the presenter. And there we go. We just need it in slideshow, please. Great. And thank you. I'm really looking forward to this. And with that, I'm turning my camera and mic off, and I'm going to upload that file. Remember.
Good afternoon, and thank you for inviting ISRI to be a presenter for this webinar. I'm Brett Biggers. I'm a senior economist at ISRI, and I will start out by highlighting a little bit about the association, then go into some general economic information, then to our economic impact study and a couple other economic studies that we do at ISRI. ISRI is the voice of the recycling industry, and our mission is to promote safe and economically sustainable, environmentally friendly recycling and through networking and advocacy. We have 1,300 members representing over 4,000 locations, and we do represent all the materials: ferrous, non-ferrous, plastics, paper, tire and rubber, and textiles and electronics. We represent manufacturers and the processors, industrial consumers, brokers and traders, and equipment services. So a bit about the economic conditions that we're in. In September and every quarter, the Federal Reserve Board updates their projections for the economy. This September, they downgraded the growth rate for the gross domestic product down to 5.9%, a 1.1 decline. This is primarily due to the supply chain interruptions that we're seeing, inflation, and labor shortages. And the unemployment rate, they rose a little bit up to 4.8 from 4.5, and then the inflationary pressures are greater than what they thought back in June. Right now, the personal consumption expenditure is one way to measure inflation, and that they raised that to 4.2% for the year, a significant increase from the 3.4% they were looking at in June. And everyone knows about the different inflationary pressures when you go to the grocery store, the gas pump. So these are real, the inflation is here. The Federal Reserve Board, one of their answers is that it's transitory. They think that as people come back to work, the inflation will subside. Other economists, on the other hand, think that it's here for a while. The unemployment rate has decreased down to 4.8% in September, and monthly jobs were under 200,000. And the last couple of months have been well below expectations expected by economists. So that's giving some concern about people going back to work. The participation rate of employees is around 61, just 61.6. A year ago, it was about 1.5% higher. The difference is about 4.3 million jobs. And so people are wondering, why? And right now there's 10.4 million job openings, and that's down from 11 million in August. And so while this is good that it went down, the postings are the highest ever in the series. The inflationary pressures are hitting the recyclable materials also. Final demand is 8.6%. It's in the far right column, and that's year over year, September of 2021 compared to September of 2020. That's the highest in the series history since 2009. And since April of this year, every month has been a record-setting month for inflation on a year-over-year basis. We can see that the aluminum-based material, recyclable materials is up, paper is up over 100%. So it's hitting our industry also. And then the International Monetary Fund looks at the growing world economies, or at the world economies, and you can see that we all went down in 2020. We're up significantly in this year projected, and for next year we're still up. So everyone's having high demand for products, and that's part of the reason for labor shortages and the economic impact that we're seeing. So ISRI does an economic impact study. This year we released it a couple months ago, and it measures the economic impact for the US recycling industry. We look at direct impact, supplier impact, and induced impact, which is like a household impact of what you do with your disposable income. And we look at the number of jobs, the wages, and the economic impact, and the taxes. Here's a link to our website, and this is open to the public, so you can go and run your own numbers, and I'll show you some state information later. So what are the uses of the economic impact study? So these are some of them, and in general, many states and localities use these to provide the different type of economic impacts for energy credits, employment credits, tax abatements. Firms like scrap recyclers often require special services from local governments and curb cuts and zoning exemptions and traffic control. So these numbers can be used for that. Government assistance. Also, the ISRI impact study can be used to provide companies with the number of jobs that the firm creates in the community. And as a member benefit, ISRI will run an economic impact for that location. So if you're in Boston and you have a couple hundred people, we can run the economic impact that you have in that area. More uses of the economic model are grant applications, corporate planning, transportation planning and purchases, and only one time. But it's an important area for the transportation now, and industry analysis. In 2020, there was 130 million metric tons processed and manufactured into new products. This was during COVID year. It's down slightly from 135 million metric tons the year before. So this is from the website, and this is what you can get and this is for the United States. So the economic impact, the direct impact, the jobs, the wages, and the taxes generated. So the direct impact, you can see that there's $46 billion directly associated with the recyclers and brokers in the industry. The suppliers, those that are supplying goods and services to the recyclers, had a 35.3 billion impact, and then the induced, which is a household effect, the spending of your disposable income, 36 billion for about 118 billion dollars. And jobs, almost 160,000 directly, and 154,000 for suppliers, and induced at 192, and over 500,000 jobs are supported by the recycling industry this year. And the wages around $34 billion, and taxes generated are over $12 billion. So the direct and supplier impacts, when you run this on the website, you'll get this sheet, and it will show the direct impacts for recyclers and brokers. And it looks at the supplier impacts also for different industries, agricultural, mining, construction, and the ones that you see there. All in all, there's a 154,000 jobs for suppliers, 11 billion in wages, and $35.4 billion in economic impact. The direct impacts going up to the top of the slide, 160,000, 12 billion, and 117 billion. Excuse me, that's not 117. So then the induced impacts, when people get their money, they do spend their money into buying different products. So this is, you go and buy food, you're supporting a farmer. You may buy a car, you're supporting recycling, supporting manufacturing. So these all create jobs and wages and economic impact. So in federal, for the taxes, the federal impact is $7.3 billion, and the state is about $5 billion, for a total of $12.3 billion of taxes generated by the recycling industry. And our website, using the link that I had shown earlier, I ran some information from New York. And so you get a little map of the area that you're going on, and you can see the economic impact. And I did one for Pennsylvania, same thing. And this can also be done for a city. I just selected Portland, Maine. And so the economic impact here is almost $26 million. The jobs 146, and wages about almost $8 million. And you can also look at the data by congressional district for the Senate, for the State House, and for legislative areas. And I selected Connecticut, just the CT1 for the Senate, and you can see the economic impact there. So you can really get down into the details, and legislators like this, so they can see what the recycling industry is doing for their constituents. The economic impact of the U.S. exports is another major job creator. And you can see the total economic impact. They're on the $33 billion, $34 billion in the last year. The jobs created, about 160,000 in wages, over almost $11 billion. Taxes generated from recycling of recyclable materials is $3.8 billion. So there's other benefits other than just the economic benefits that are derived from recycling. Here we have non-ferrous metals that can be recycled an infinite number of times. 75% of aluminum produced since over 150 years ago almost is still in productive use as secondary raw material. Manufacturing paper and paperboard with recycled materials uses up to 68% less energy than using primary materials. And then using recycled using recycled plastics in the manufacturing saves up to 88% of the energy needed compared to the primary materials that would have been used. U.S. recyclers process more than 5 million tons of electronic products each year, and the recycled rubber and molded products reduces greenhouse gases by between 25 and 80% compared with the primary plastic resins. With all the recyclable materials, there's a buyer and a seller. And ISRI has had the ISRI specifications for over 100 years. And they're used in domestic transactions, international transactions, and they're updated to reflect current marketplace trends. And right now, each commodity division is going through a review process of reviewing their commodity. And we're updating them. In August, we updated some paper and some copper specifications. And the plastics division right now is looking at theirs, and electronics, and they all are continuing to look at the specifications that they have to make sure that they're up to date. We are also, this is used internationally quite a bit, so we're working with governments, and we just received a grant from the Census Bureau. It's one of their programs to market recyclable materials overseas. The ISRI Recycling Industry Yearbook is also a product that we use, that we produce on the different materials. We work with the U.S. Geological Services and some of the import-export, the ITA, Census Bureau, Bureau of Labor Statistics, and these are the sections that are in the book, Introduction to Recycling, and we look at recycling's benefits, challenges, and opportunities. We look at the major commodities, whether it's copper and steel and plastics, paper, and all. And we have a statistical appendices with just data tables. And here's the website that you can go and look at that. And then ISRI has other programs, that some upcoming events. The Critical Elements for Recycling in a Circular Economy is happening mid-November, November 16th. Then we're having the virtual ISEC conference, which is on safety. It's a 3-part series. And in November 9th, November 16th, and November 23rd. Then we have scrap news online. And then we advocate for the recycling industry on the state and national level. And then the other two here we just went over. So thank you for the time, and you can contact me with any additional questions, and I look forward to answering any of the questions that you have.
Thanks, Brett. That was terrific. Lots of slides, lots of questions, which is terrific. We're going to move to Lawrence next. Remember, people, to post your questions in the question box. And let's see, Lawrence, hopefully you saw the little thing.
I did. Let me know if you can see my screen.
That looks perfect. Thank you.
Great. Let's see. All right. Hey, everyone. My name is Lawrence Doppolt. I work for the Environmental Protection Agency in the Resource Conservation branch. I work specifically in the Office of Land and Emergency Management. That's kind of the high level office that I do my work in, and we focus on things from mainly focus on material management and end of life for various curbside materials and kind of non-traditionally or non-curbside materials. And then the Resource Conservation and Sustainability Division focuses on the Resource Conservation Recovery Act, and we focus on hazardous and non-hazardous materials. And so I personally work on things like recycling market development, recycling measurement, and standardization, as well as this Recycling Economic Information Report, which I will talk to you all about today. So just a brief outline, I will talk about the background of the Recycling Economic Information Report, go into some of the updates in this 2020 version compared to prior iterations, do a fairly high level kind of bird's eye view of the methodology and the model that goes into the REI report, and then talk about the summary of the 2020 report once there's kind of a good baseline understanding of the model and what goes into the report. So for the very first kind of understanding of this, the first REI report was in 2001 in coordination with the National Recycling Coalition. And essentially this first report tried to answer the question of, does recycling have any sort of significant economic benefits? And the initial report, along with basically each report that has followed, has showed that yes, it does. And so that was the 2001 report. The 2016 report was the first kind of update to that initial 2001 report. And the 2016 version kind of revamped the entire report. It did several things The main one being that it developed a waste input output model, which I'll go into in more depth in future slides. But essentially, this model tries to separate the recycling and recyclable material flows from kind of normal economic sectors or the non-recycling flows. The 2016 report also covered the economic activities of 9 material sectors, which I'll also discuss later on, and then kind of incorporated the notion of what we call material transformation into the definition of recycling, which essentially allows the model to capture process input and process influence from refurbishing and remanufacturing goods. It kind of just gives us a more holistic and realistic scope of the entire recycling process. And so the source data for the Recycling Economic Information Report comes from the Census Bureau, most specifically from the Bureau of Economic Analysis. And this data is based on the formal economic census that is conducted once every 5 years. And so this economic census collects like exhaustive statistics on businesses of all sizes and geographic areas across the United States and their impacts on the economy. And in particular, the BEA releases what are called input-output tables. And these essentially aim to track the monetary flows of goods and services across industries. So which industries produce or make what, and what industries consume or use what. And these input-output tables are released every year for 71 industries. However, every 5 years, in conjunction with the economic census, they release these benchmark tables. And these benchmark tables cover 405 industries. And these are more accurate data. They're able to go back and benchmark those annual ones. And this 5-year data, this 5-year census, is what the REI report is based on. So the data that we use for REI is not based on the annual, it's based on the benchmarked 5-year data. And so all of this together enables the model to generate an overall economic impact estimate from recycling, including jobs, wages, and tax revenues from various recycling activities, both direct impacts and indirect impacts. You kind of heard similar things from the last presentation from Israel. They do a similar economic impact study. And so these are kind of 2 studies that exist side by side, but do have different methodologies and scopes. So yeah, here are the updates. So now that we've kind of looked at the background, just talk about the updates between 2016 and 2020. Methodologically, there's no difference between the 2016 and 2020 reports. They both use the waste input-output model, and they both use the 9 material sectors that I will talk about. Main difference here is the data and the source data in terms of the year. And so the 2016 report used 2007 data, and the 2020 report used 2012 data. And so I'm going to go ahead and talk about what some of you might be thinking or have a question about is, where, if at all, is there value in producing a report that has a 5-year, potentially more than 5-year lag in the data? So the BEA releases this data every 5 years. 2017 data should be released soon. I think I had seen that it is expected to be released in December of 2021, and there might be delays because of COVID. But once that 2017 data comes out, we will look at doing another update to REI. But the short answer is, if BEA continues to produce this data and they find value in conducting the economic census and putting out these detailed benchmark input-output tables, then we kind of rely on them and their judgments of value of this data. And as long as they continue to post that and report it, then I believe that we'll continue to use that data to update REI. And so, again, this is kind of the big update between the 2020 and the 2016 report. All 3 of these are available online. I think I have a link at the end of this presentation, but you can see the differences in the jobs, wages, and tax revenues for the 2016 report versus the 2020 report versus the 2001 report. So I will go into kind of high-level bird's-eye view of the waste input-output table, which is kind of the core of the REI methodology. The WIO, or the waste input-output methodology, aims to flesh out the recycling materials and material flows within and between sectors, and kind of delineating that from the normal flow of goods and services. So as I mentioned earlier, the normal input-output tables aim to track the monetary flows of goods and services across and between sectors. So which industries produce what and which industries consume what. While the BEA data contain information on economic transactions between different industries, they don't have specific recycled transactions or transactions that involve recycled materials or recyclable materials. It's because separating out those recyclable material transactions from the normal transactions are difficult. The recyclable materials are essentially embedded into other sectors in the tables. So for example, recycling might be embedded in the broader activities of the manufacturing sector. One of the examples I have is the iron and steel mills and ferroalloy manufacturing. So that's one example, or they're already aggregated and combined with other industries like a waste management and remediation services industry. So within each of those industries, there are some recyclable activities, some non-recyclable activities, and those are aggregated, combined, and embedded into those tables as is. So essentially, the waste input-output model tries to build on these input-output tables by adding information from and about recyclable and recycled material flows and trying to distinguish these processes from normal industry activities. And this, combined with the economic transaction data from the input-output tables, enables the estimation of economic activity attributable to recycling. And so in terms of the material sectors, the REI report starting in 2016 uses these 9 major material categories or sectors: the ferrous metals and non-ferrous metals, paper, glass, plastics, rubber, electronics, construction, demolition, and organics. These materials were selected before fully developing the model, and this gives us a little bit of flexibility in the model of potentially adding other materials in the future. So the model is not strictly based on only using these 9 categories. If we wanted to add, say, textiles to the model, we would be able to do so, and the model would support that. Furthermore, there is a distinction in the report between direct and indirect activities. So the direct activities, this distinction is fairly straightforward. The direct activities are those that are directly associated with the transformation of materials into commodities that can be sold. So the example that you see here are the transformation of aluminum scrap into ingots in a secondary smelter. So these direct activities are those that are directly associated with like the actual recycling of the materials, versus the indirect activities are kind of the upstream supply chain economic activities. So collection, transportation, sortation. The example you see here is the collection, sorting, and transportation of aluminum scrap to that smelter. And so these indirect activities can kind of range from employees that work for suppliers of steel recycling facilities, or electric utilities for those facilities, or just the transportation. So they're somewhat indirectly related to recycling, even though they're not involved in the actual transformation of materials. And so the report does make this as a clear distinction. And together, these direct activities plus the indirect activities make up what we call the total impacts approach. And the total impacts approach is the primary approach that we use for measuring the economic impacts. And so here are the economic impacts from the 2020 REI report. So in using the total impacts approach, the report finds that in 2012, recycling accounted for around 681,000 jobs, $37.8 billion in wages, and $5.5 billion in tax revenues. And the most significant contributors to the national economy for all 3 of these economic areas were found to be metals, both ferrous and non-ferrous, as well as construction and demolition. And again, from the last presentation that you saw presented by Isri, their jobs, their wages and revenues do slightly differ from ours. And again, I'm not going to go into those differences, but some of them do include a difference in scope of materials. So it is a good idea to kind of look at both reports and read the methodologies and the backgrounds on them and see how they are similar and see how they're different, because they do produce different numbers. And here's just a graph that shows all of the 9 materials analyzed and their economic effects. You'll see here that there are 10 categories here, but that's because food and yard trimmings are combined into one as organics, just one big organics category. And the yard trimmings category includes biodiesel, biogas, compost, mulch, and wood chips. You can see here that C&D, which is construction, demolition, precious metals, and aluminum, are the kind of highest impacts in all 3 of these categories across all materials. And then you've got paper, rubber, food, glass that are kind of, I guess, secondary in terms of their economic impacts. So just to kind of recap, why do we think REI is important? Why is the Recycling Economic Information Report something that we want to continue doing? Well, it allows us to assess recycling's effects on the overall economy. There are various economic and community benefits that we can associate with recycling. These include basically supporting American manufacturing, creating jobs in the recycling and manufacturing industries, as well as tapping into a domestic source of materials. The REI report is what we believe is nonpartisan. Recycling has both an economic and an environmental positive impact, and this report is able to sort of showcase both of those impacts. It engages local and state stakeholders. There are some state REI reports, or states that are looking to do similar REI reports that are somewhat modeled after ours, and we think that it's great to see states trying to do a more in-depth, narrow focused report and analysis on their state versus REI from EPA, which is more nationally focused. And it can help identify investment opportunities if you know which industries are big on recycling and are generating jobs and wages and revenues. This could be just one of many indicators for where you might want to invest funds and resources in the future. So I know we're doing questions at the end, but here's the information for REI. You can find that on our website. You could also just look up Recycling Economic Information Report on EPA's website. Here's my personal contact information. I'm always open to people sending out emails for questions, and EPA Land is our Twitter handle. I've been asked to share that. So yeah, thank you for providing the opportunity to share.
Thanks, Lawrence. And I've getting a lot of comments that even though I reposted the handout and it works for me, it's not working for people. It is now posted on the NERC homepage. So stop, I'll take it off of here and stop worrying about it. Everything will be fine. Thank you, Lawrence. So now we're going to turn to Yuri Freeman, who is going to speak to us about a state-specific report that was done on behalf of Recycle CT Foundation for the state of recycling. And Yuri, it's showing perfectly, but we don't see you. And there we go. Now we have everything we want in life. Thank you.
All right. Well, can you hear me too?
Yes, perfectly.
Yes, it worked. You never know with webinars. Well, gosh, Lawrence and Brett, that was awesome. And I'm glad I get to go last because you all explained a lot of the terms I'm going to use. And I'm also fun to I'm a resource economist as well, so to get to nerd out and talk about economics for a couple hours is super fun for me. Hopefully our attendees find it as engaging as we do. Managing Principal at Resource Recycling Systems, RRS. RRS, for folks that aren't familiar with it, based out in Ann Arbor, Michigan. I'm here in Boulder, Colorado. We've got 6 or 7 staff here in Colorado in our office here. And thanks for the intro, Lynn. I've been in the recycling industry for 17 or 18 years now, so going on a couple of years. I am going to talk about a lot about what Brett and Lawrence already spoke about, but on a state level, so more refined and granular level than both of them. So I'll be talking about the Connecticut Residential Recycling Economic Study. Thank you, Cheryl Baldwin and Recycle CT for commissioning this, what I feel to be an important study and a super fun study to do as well. We completed this in the back half of 2020, published it with Recycle CT in early 2021. I'm going to do it relatively fast if I can. A lot more of these data are available on Recycle CT's website, and also I'm going to try my best not to be repetitive with what we've heard already. So the goal of the study, quantify the economic impact of residential recycling. So unique to this one, as different from what Brett and Lawrence talked about, this really is residential recycling. So I'm going to talk a bit about the methodology, how we drill down to the residential only and recycling only. I'll explain the difference of that. So do a little bit on the methodology, then go into the results for 3 or 4 slides, 5 slides or so, and hopefully not have too many data points to overwhelm folks today. So why do we do it? Brett and Lawrence already spoke about this. Everyone understands the environmental impacts, but quantifying and demonstrating what these economic benefits of recycling, in my opinion, are very important when we're talking to policymakers, investors, state elected officials, demonstrating that recycling isn't just a feel-good thing. This really does contribute to the state's economy, local economy, creates jobs, and being able to quantify that data does go a long way to supporting recycling. I also think it's important when we're talking about investments, that there are ways to pay back. Recycling might not have the ROI of some of these other exciting investments, but it does pay back for the state, it does pay back in terms of jobs created, as well as tax benefits. So the methodology. This is really what we did. Four big steps. I'll talk about them briefly. So if someone wants to do a study like this themselves, there's some ways to do it. There's examples out there. There's a lot of work that Brett and Lawrence do as well. So first thing we want to do here in the state of Connecticut is really define the boundaries. So what counts, what's in, what's out, what is residential recycling in the state of Connecticut, how far does it expand, what materials are in. Once we can define those boundaries, we want to identify the relevant industries in Connecticut using NAICS codes, which we heard a little bit about today. The next step, step 3, which I'm not going to talk about too much today, is the data collection, which really is the hard work in the project, is collecting the data to put into the model. Doing the actual modeling is not terribly difficult. It's getting everything ready to put into that model. Then similar to the other presenters today, input-output model, we use InPlan to do the economic contribution analysis, and now we'll show those results. So what was in residential? So when we heard earlier today, we saw things like rubber, yard waste, exports, imports, this whole range of stuff that happens, C&D, this whole range of activities that happen within the recycling industry. For the state of Connecticut, we're really only looking at residential recycling. So what does that mean? For Connecticut, these were basically the materials listed on their universal recycling list, as well as some residentially focused stewardship programs and the bottle deposit. I won't go through all of the materials, but obviously includes bottles, the bottle deposit, plastics, metals, the things that you put in your blue bin, your recycle bin in Connecticut. And when we get to residentially focused stewardship, for Connecticut, this was some e-waste, paint, mattresses, and mercury thermostats. So the next part, now we've established what counts. We know what we're trying to measure, the impact of recycling these materials. Next, we want to know who is doing this recycling. So what's the beginning of this process? What's the end? So we started at collection. So haulers obviously are in municipal, commercial, or not commercial, private sector. And we end at the first manufacturer. So this is a little bit about the direct impacts that Lawrence was saying. So the ones that's actually making, say you're a paper mill, state of Connecticut, you're making paper and you're using recycled inputs to make that paper. You are a first manufacturer. Once you sell that paper to an envelope maker, that paper that you're selling is competing against virgin. That first manufacturing process ended. So the person that takes that paper and makes an envelope out of it is out of scope. The paper mill is in scope for our project. The big challenge and kind of the unique part of this study compared to the national studies is and what made it unique is we're looking at residential only. This took quite a bit of work to figure out what the residential contribution is for recycling in the state. So going back to that paper mill example, we could go get the NAICS codes or US Census data for paper mills and know how many people work in the paper mill and what the revenues are and what their contributions are. But that would be disingenuous in overcounting the impacts of residential recycling in Connecticut. Because A, we know that not all the activities within the paper mill are dependent upon recycled inputs, and B, we know that not all those recycled inputs are residential, there's also commercial. So we had to go through each of these NAICS codes and break out their activity due to recycling. So what part of the paper mill is actually using recycled inputs? And then once we got that, we had to say, okay, of that portion, what part of it is using recycled inputs from the residential sector? The part I'm not going to talk about is the data collection. To do it, if you want to know in the Q&A, happy to dive into it. But it's combination of interviews, survey work, lit reviews, and phone calls. So a lot of talking to people, a lot of querying different manufacturers, different municipal sector actors to figure out what they're doing, who's doing what, and what portion of their staff is doing what activity. Oh, I should say too, if anyone wants to learn more about these NAICS codes and what number of employment by each one by residential, Recycle CT has a much longer slide deck up on their website, probably 70 slides and annotated slides. You can dig into all this stuff and learn more about it. Out of scope, I spoke about this briefly, but I just wanted to make sure that folks understand we're really talking about residential recycling. So the impacts that you might see on this report could be smaller than if you expected to look at the entire recycling industry. As we saw from Lawrence's, C&D had the biggest impact. C&D was not included in our study. Recycle CT was not interested in that at this time. Reuse, thrift stores, C&D reuse, refurbishment, not included. Another big one that was left, was not in scope here, was organics, so food recovery, yard waste, composting, not included. Like the other studies, we did an input-output model. InPlan, this is the leading economic input-output model, uses some of that BEA stuff that Lawrence is talking about, as well as Bureau of Labor Statistics and US Census Bureau to put together their models. Direct, indirect, and induced. I think we beat this over your heads today on what these different ones are. So it's slightly different for this study than what Lawrence is talking about. Direct is, so how can this? Direct is the impacts of that activity in the industry sector. Indirect is if you're a MRF and you buy baling wire and PPE, you're spending money in the economy, so that's the indirect because you're spending money at these other places. The induced is the employees of that MRF, they get paychecks and they go home and spend those dollars, as well as the employees of the baling wire supplier. They also get dollars and spend them in the community, so that's why $1 of investment works out to more than $1 of impacts. All right, so that's the methodology. What are the results? And then we can get to Q&A for all of these presenters. So total economic contribution of res recycling in Connecticut, I move my head so I can see both screens, about 5,000 jobs, direct, indirect, and induced. I'll show in a minute what portion of this is contributed to which part, but it's about 60% was direct impacts. The total economic output, jumping all the way to the right side of my screen, maybe it's the left of yours, is 1.159 million, so basically $1.16 billion of total economic output for residential recycling in Connecticut. Total labor income, 380 million, 640 for total value add. Really quickly, what these data mean. Total labor, so the jobs make sense, how many jobs are created from recycling in the state, direct, indirect, and induced. Total labor income includes the wages, the payroll taxes, and the proprietor income. So how much is made in labor, including proprietor income. The total value add is equivalent to the GDP, or gross state product, GSP, for the state of Connecticut. So that's that middle one, 642 would be basically the GDP. And total economic output includes the indirect inputs. So what does that mean? So for example, if you're building a recycling cart, there's a company building a recycling cart, they're going to buy plastic and metal to make that cart. They have to have a facility, that facility runs on power and there's staff working there. Once they assemble and mold the cart, they're going to deliver that cart to a hauler that bought the cart. So the total economic output is the revenue you sold that cart for. How much revenue is earned on those sales? The total value add pulls out the cost of goods sold, the indirect, the cost of the plastic and metal to build the cart. It also pulls out the cost of the power to supply that facility, the cost of making the material. So that doesn't include those indirects. This is my densest slide. Probably better to take home and look at, or get a copy of this and look at otherwise. But this just shows the contribution, direct, indirect, and induced for those 3 different categories we just talked about: employment, value add, and total output. Kind of my takeaway from here is that the majority of the impact is from direct. So 60% plus, about 2/3 or so is really direct impacts, but there are impacts that go beyond with the indirect and induced that contribute to the economic impacts in the state of Connecticut. So if you want more data on this, we have it in the report by even more discrete NAICS codes or more granular NAICS codes. I want to show one slide on where these impacts come from, who's contributing to them. About 1/7 is from bottle deposits. So this would include like Tomra's in Connecticut, and they're making equipment, and you have to maintain those bottle deposit programs, and you have to collect from them. So about 14%, 1/7 is from the bottle deposits. What else would I take from here? 35%, about 1/3 is collection through the MRF. And then if you put on the end markets that are located in Connecticut, you're looking at about 2/3, a little under 2/3 of the impact is from collection to the end markets in Connecticut. Important to note, because I don't think I said this earlier, that if those materials leave the state of Connecticut and they get processed in New York, that end market didn't count in the study. So we stopped, the border was at Connecticut. End markets outside the state of Connecticut, although Connecticut is feeding the materials, didn't contribute to the economic impact in the state. So that 1.16 billion, how's that stack up against some other sectors in Connecticut? When you look at the big picture, it's 0.25% of the total economic output in Connecticut, which is, it's not insignificant, but it's not, I don't know, 0.25% doesn't sound that big. So when we talked about that, like, well, how is this compared to some other places? It is 2.5 times greater the impact of breweries in the state of Connecticut. It is more impactful than the construction of new multifamily residential structures in Connecticut. When this happened, we did this report during 2020, early 21. COVID obviously was on our minds pretty heavily then. We were talking about the impacts on restaurants, the less than recycling. It was about the quarter of the total economic impact of restaurants in the state. So 0.25 might not sound like a big number, but when you compare it against other activities in the state of Connecticut, it really does have a large impact on what's happening in Connecticut. What would be some of the next steps? We put Cheryl and her team at Recycle CT. They asked us, like, well, this is great. We appreciate the study and the results of what they're seeking. But what will be the next steps? On that last slide, let me go back. This is the economic impacts. This is strictly looking at this job creation, value add, labor, and total output. When you look at some of these, it will be hard for me, maybe there's a way to do it, but I think it's hard for me to see what the positive environmental impacts will be of construction of new multifamily residential structures. Maybe if you're going in a brownfield, there could be some positive environmental impacts. Breweries, maybe there's some positive environmental impacts. We know there are positive environmental impacts of recycling. So it would be great to combine these data, the economic impacts, with that triple bottom line economics to say, gosh, besides just this job creation, it also adds these environmental benefits to help push it over the edge. So it's actually more impactful than some of these other sectors. As I mentioned a few times, we're really looking at residential only. So state of Connecticut wanted to see the big picture for economic impacts, put in things like yard waste and composting, C&D, commercial, look at the big picture beyond just residential. And also, as we went through this and we were looking at end markets, we saw a lot of stuff, as you all know in NERC, a lot of things are crossing state borders in New England. And so looking beyond just the state of Connecticut and seeing, looking at a regional study may be more illustrative as to what the actual impacts are in the region. So kind of takeaways for me, Over $1 billion of impacts from recycling, just residential recycling annually in the state of Connecticut. We know that state of Connecticut has a long way to go to reach its goals, and they're driving closer and closer to them, but they haven't reached their goals yet. Investing in capture of additional materials, getting closer to that goal, has potential to add at least 1,000 more jobs. We did a quick analysis on this, seeing to get from where they are today to some future goals, what the impacts will be. A lot of opportunity to increase recycling, a lot of opportunity to add jobs, and continue to invest in recycling in the state of Connecticut. There's a one-page infographic. It's up on Recycle CT's website. We kind of distilled all these data down and this report down to a page. If folks want to look at that and they want to share it with others, it's up there for the taking. Just go onto the website and get it. And that is it. Here's my contact. Feel free to email me, email Recycle CT and Cheryl and her team, and they can share these data as well. And thank you very much for this opportunity, Narc, for presenting.
Yuri, thank you so very, very much, and everybody. That was wonderful. Please remember to be posting your questions, and Terry Goldberg, the Executive Director of NMOA, the organization that's co-hosting this with us, will facilitate that. I want to encourage all our speakers to put their cameras back on and unmute themselves for this next part of the conversation. And Terry, I've been looking at those questions. There's some extremely interesting ones, and you always do a great job figuring out which ones to ask. So with that, I'll mute myself. Thanks.
Thank you so much, Lynn, and thanks to all of the speakers. This was a really interesting presentation. It was great to see the different studies and methodologies. So there was a lot of questions about your data that you're using and the methodology. So why don't we dive right in, starting with the ISRI study, Brett. What is the data input you based your impact study? So sort of clarify some of what your data inputs, were and your sources of data.
Sure, it's very similar. We're all using very similar sources. So John Dunham and Associates does our economic impact study for us. They do have M-Plan, and that does rely on the Bureau of Economic Analysis, the Census Bureau, Bureau of Labor Statistics, and other government agency data. And county business patterns, one of them. And then there's some assumptions that they make special for us, and we supply them with membership information. So they take some of that information and tweak it a little bit to customize it.
Okay, thanks. And I'm sure that this is more elucidated in the report itself, so people can go and look at for that.
Yes, it's on the website and it's open to all. Yeah.
Okay. So a question that I think all of you might be able to address, and I think I know the answer to this listening to your presentations, but can you talk a lot about anything about how much the reuse industry is included or captured in your economic impact modeling? And does it include, electronics reuse, retail used products such as clothing, furniture, books, other kinds of products? And anyone want to start with that?
I've got probably the easiest answer, and the answer is no, unfortunately. So that was a gap. We knew it, and we talked with Recycle CT about that. So ahead of time, we knew that was a gap. But that was not the goal of this. They wanted to show the impacts of blue bin recycling and what that residential recycling was. So 0 impacts of reuse, refurbishment, thrift stores, any of that. None of that was included in the Recycle CT study.
Yeah.
Yeah, that's the same thing with us. Reuse is something that EPA really wants to take a look at, but with the REI report, reuse was really not as much a focus. There was some refurbishment and remanufacturing for like electronics, but one of the materials that is not included in the REI report is textiles. And I had mentioned in the report that, or in the presentation, that for our report, we do have those material sectors where the model is flexible, so that we do want to add textiles. We do want to look at that and add it. We kind of have the capacity with our model right now, but in this most recent iteration, we did not add that, but it is something that we want to take a look at.
Yeah, in ISRI's report, in ISRI, we do include textiles in there, And so that is a component. And roughly in the industry, about 2/3 of the recycled materials come from the industrial and manufacturing avenues, and about 1/3 of it's curbside.
Hey, Lawrence, were you using, when you looked at the C&D, does any reuse get kind of implicitly included in C&D if they're doing like on-site recovery of, you know, asphalt, or you're reusing lumber or something? Or is that separate from that C&D? So I was surprised to see how big that C&D number was, and it was great. I was just interested.
Yeah, that's a good question. I think the C&D industry is just really large, and especially like in the time frame that we were analyzing, there was a lot of construction that was occurring. I'm not a C&D expert, so I don't know kind of the ins and outs of how reuse goes on in construction demolition, but I'm fairly certain that, you know, reuse as a term is not really included in our economic impact report, as some people might consider reuse for things like textiles or electronics, where you're literally like reusing the product. There's some sort of change in the product that's happening to maybe be used as like feedstock into like a new construction or demolition material, but not really in the traditional sense of like just straight up reusing a product.
Yeah, like the demolition, not deconstruction, right? So you count that demolition, not the deconstruction. Yeah.
Yes.
Thanks.
So related to that, actually, I had a question, Lawrence. When you're talking about construction and demolition waste and recycling, are you considering things like alternative, you know, ground up C&D that ends up as alternative daily color? Is that considered recycling, or is that outside? I mean, this is a controversial area, whether alternative daily color at landfills is recycling.
Yeah. I do not want to make, well, for the RAI report, I'm fairly certain that that is not included. And I definitely don't want to make any sort of statement on EPA's behalf as to whether or not that is considered recycling. But that's sort of, I mean, that is very much like an important thing that's coming up in the context of like reuse and circular economy and, you know, all of that stuff. EPA is definitely like considering all of those different pathways as, you know, what should be included or not included as recycling. Things like alternative daily cover and landfill cover are up there. For the purposes of the REI report, I would say no. But again, I don't want to make any sort of judgment call on whether it should or should not be.
It didn't count in recycle CT. You know, and really because it wouldn't contribute to additional jobs. If you're at a landfill and you're putting ADC, whether it's pulverized glass or fill, it's not going to create a different economic impact or different amount of jobs. You still have someone that has to spread it and put it on there. So it didn't, we ignored it.
Okay. All right.
Could I just add one thing on the C&D? The Vinyl Institute has a V-cycle task group that looks at the recycling of vinyl siding, and that historically would have gone into the landfill. And they've hired an outside firm to look at the issue and all, and they're making big strides in recycling of vinyl. But you know, we have to keep in mind that when vinyl is produced, it's usually produced to last, you know, decades, like for your pipes and for siding on homes and all. So they're dealing with a lot of composition issues. That something that's ready to be recycled now may have been made in the 1980s.
Right.
And there could be some hazardous materials in there, and you know, so but they're, you know, they continue to go forward, and so that's an industry that's we're starting to see more recycling done.
That's really cool.
News. So sort of switching gears, I'm not sure who talked about this. I don't remember a lot about it, but what are the sources for statistics on energy and greenhouse gas emission benefits of recycling? Somebody want to take that on?
I like EPA. I like WARM. I like the EPA WARM model is a good one. We didn't include it in the Recycle CT study, but EPA WARM is great. I mean, we also RS use a couple different LCA tools if you're getting down to a granularity of a certain package or material type. But in general, I like that EPA tool. I think it's great, Lawrence. What y'all do?
Yeah. WARM is the big one. It's kind of funny that we use like our own data for it, but WARM has its own source data. We use WARM. We use like the facts and figures report. There's electronics, the electronics waste characterization report, and then we look at different like specific industry data depending on what material we're looking at. So some of it comes from like the Glass Packaging Institute for glass, or the Rubber Manufacturing Institute for rubber. So that's we look at material specific like industries, and then we also look at things like warm.
We use WARM also. We have a chief scientist on staff that helps many member companies navigate the model and help produce, their own savings for their company. So it's a member benefit.
That's great. So someone from Oregon is asking a question about the fact that they've now passed legislation on mandating EPR for packaging and paper products in Oregon. And so, do you forecast that this will have any effects on the kind of analysis or, recycling economic benefits that you all have been, forecasting? I mean, in Connecticut, there's a lot of interest in that. It would certainly impact the residential sector. I mean, I don't know if you guys have any insights into this. If not, we can move on.
I assume there'd be an impact. How big and to quantify that impact, I think would take some work. But I would assume there would be job creation. You're adding new businesses to do that collection. You're growing the MRFs. That is, and Brett, you said you all use Implant too?
Yes.
I mean, that's a lot of what Implant is used for. Like if you're adding a new Walmart in the city, what's going to be the impact of adding that business to a city or state? And so that is, I mean, figuring out those impacts are through Implant and doing an economic model is a great way to do it. Because if you're adding EPR and you're going to add collect X thousand more tons and need 3 new businesses to manage it, you can see what the economic impacts of adding those businesses to the state would be. But it's really hard. We tried to do that a little bit for Cycle CT and come up with some conjecture. It's just so wildly out there that we didn't even want to publish. We talked about with Recycle CT, and unless you actually do a study, coming up with those impacts of like scenario A through F is really takes quite a bit of work. It's not impossible.
Yeah, and in addition to that, the rulemaking process is underway now. So there's still a lot of things that are unknown. So even to make assumptions that it's a big guess right now. One of the factors that may impact the residences is how much of the pass-through cost will happen. So if a company in the EPR has to pay so much to a PRO, then are they going to pass that cost on to the consumer in a higher price? And as we see inflationary pressures already, and we don't need more inflationary pressures, but in Oregon it's already passed. So now it's about rulemaking.
Yeah, that's an interesting point. I haven't thought about that. I just think that really any sort of policy that's going to ideally increase the amount of recycled materials is going to have some sort of net positive economic impact on recycling. So measuring that might be difficult and it might be marginal. But the stuff that's going on with the EPR bills in Oregon and Maine are definitely something that we want to keep an eye on, because it's going to have an impact regardless, just because of its effects on trying to ideally increase the amount of recycled materials, just through like consumer education and all of those kind of behavioral changes. But it's hard to quantify that and think about that for our reports.
Where it gets tricky in measuring those impacts is that like collecting a route, you can keep adding more materials and keep adding households to some tipping point, and then you have to buy a new truck and a new person. And same for the MRF. You can keep pushing the throughput or add another days or other shifts before you have to build a new MRF. And so where is that tipping point? And if you increase recyclable recovered by 10%, can you manage that with the existing system, or do you have to invest in it? Making those decisions is where it gets really tricky with the economic impact analyses. Hey, can I ask a question, Terry? Brett?
Go ahead.
Well, what's your take on, I saw one of your early slides talk about inflation, and you just mentioned it there. I mean, has Israel been thinking about the impacts of inflation or perhaps stagflation on what it's going to mean to our markets, or is that too deep a question to ask right now?
That's a good question. So we're monitoring the historical indexes that BLS puts out. And and inflation's high. I mean, many of these indexes are at all-time highs or at least on cycle highs. Like for paper, last time was about 10 years ago that they were this high, the absolute index. So, you know, many of the commodities, as you know, the definition of a commodity is that it goes with business cycles, right? You know, it either goes with them or counter to them. So the inflation is big, but just because inflation is out there doesn't mean that the profits go along with it. You know, that's we can talk more about why that is, but that doesn't automatically mean profits go along with the inflationary pressures.
Well, the next question that I was going to ask you is sort of related to this a little bit, so for the wage data in the various reports, does the analysis reflect living wages and/or scheduled wages under law? You know, how do you factor in any of these other, you know, ways of looking at wages, and somewhat the pressure on wages is contributing to inflation? Somebody want to take this on? I don't know.
Sure, I can start. So the wages are the actual wages that are paid. Mm-hmm. So if there's laws in an area that have a, you know, a minimum wage higher than the national law, that's taken into effect because it's what somebody is paid.
Yeah, I was going to say something similar, Brad. And we actually did ours at a very interesting time because it was mid-2020. And so we were looking at U.S. Census data and employment stats and trying to figure out what impacts COVID had on employment and wages. So we went back historical and tried to see if we could use different years' data that would be more reflective of what's happening in 2020, and did a bunch of analysis and ended up basically just sticking with the published data from the federal government.
Right. Yeah, we did some economic impact analysis for COVID and saw the potential was around 20% of a job decrease. Mm-hmm. And so our economic impact that was just released, we noticed that 130 metric tons was processed versus 135 the year before, and that was due to COVID.
Interesting. Did you want to say anything, Lawrence?
Yeah, I don't have too much to add to that. I will just say that it seems like both of your reports, Yuri and Brett, analyzed more recent data than ours, because our 2020 report analyzed 2012 data, but just looking at the kind of difference between like 2007 and 2012, the wages, the jobs, the revenues between those two reports went down between 2007 and 2012, and you can speculate, what could have caused that, what might have caused that, but there are various economic kind of events that happened, the crisis of 2008 being one of them. And so these wages being paid, as you mentioned, are actual wages. It's the same thing for the REI report, but unfortunately we don't have any sort of recent analysis, because I would be very interested to see how like COVID is impacting these as well.
So you've talked to some extent about this, but can you elaborate a little more about the differences between the ISRI model and the EPA model, and how that reflects in the differences in some of your results? I mean, obviously the time frames are different, you just mentioned that, but other differences?
Yeah, so and we can work together on this one, Brett, but my understanding is that one of the biggest ones is scope of industries. So ISRI includes, we both include things like paper, glass, plastics. We do not include textiles in our analysis. I believe ISRI does. And then we also include construction, demolition, and organics. I believe ISRI does not. And so there are probably around, I think the difference in the two reports. So for 2020, we were analyzing 2012 data. I'm not sure, is that what year ISRI's report would be for looking at that data, but I'm pretty sure the differences tend to be around a couple 100,000 jobs at least, and that seems pretty consistent with the amount of jobs in construction, demolition, and organics relative to the number of jobs in textiles.
Yeah, I agree. I have nothing really to add, because time frame is one of the big issues in a couple of products that you include that we don't.
Yeah, and so, yeah, I think the biggest one is the scope. And like I mentioned, we really do hope to add textiles to the model. I think that would provide a little bit more depth, and it would be good to do some sort of comparison with ISRI's numbers on an industrial basis as well, to see how much we match up on like the industries that we do share in our reports. So,
And
but
there may
overall,
be
yes.
one other slight difference that we don't include the nonprofits in ours, so ours is for the for-profit recycling industry.
Oh, interesting. Okay, so Lawrence, this is a question for you. Using the input-output model, how do you examine how baskets of goods costs varies across localities? So sort of looking more, across the US in terms of, cost differences around the country.
Well, our REI report is all national, so we don't look at differences across states or cities. And all of those economic transaction data come from BEA, which are national. And so the kind of economic transaction data that comes from those input-output tables are looking at a high-level US number. So that's the analysis that we do. We don't have any sort of like state-level way to differentiate across jurisdictions.
Okay. So this is a question for jury. Do you know the quantities of obligated materials being generated and recovered in Connecticut, and how are those figures calculated?
I don't know them, but I saw them. So they were involved. So Recycle CT has actually some really strong data, and so we looked at total generated. I don't think we got that, but we got the tons going through processing facilities and the end markets they go to. And so that was included in the analysis, is how many tons are moving through the system, and differentiating res versus commercial through different facilities and the markets they're sold into. So yes, we did consider it, and was part of the driving force of the economic impact analysis. And
Okay.
I don't know if Cheryl's on it. I feel like I saw her name, but I talked to Recycle CT because they collect better data than a lot of other states I've worked with, and they have really strong data on tonnages.
Did you want me to unmute Cheryl Baldwin for her to say something? Is that what you're
I
asking?
don't know if she's out there and she wants to
out there.
get put on the spot. Heck yeah.
Well, I don't know if she wants to be put on the spot, but
Yeah, I don't know. But she could answer that way better than I could.
Cheryl, I've unmuted you if you want to unmute yourself and say something.
Sure. Can you hear me now?
I can hear you.
So, so Recycle CT, it's an interesting thing. Recycle CT Foundation wanted to do an economic study, and yet the data all comes from Connecticut Deep. So we have a lot of data in Connecticut because as part of our permit requirements, we require all MRF operators as well as municipalities to submit data to us. And so that is the data that Yuri and his colleagues got to get very excited about, because we do have a lot of data. And so it was great. We also do a lot of data related to all of our product stewardship programs, because they're also required to do so through either permits and or because of the legislation related to EPR.
Thanks, Cheryl.
Sure.
Gary, want to add anything to what Cheryl just said, or should we move on?
No, but thanks, Cheryl. You said it way better than I ever could. I appreciate it.
Good to hear you, Cheryl, your voice. Okay, so this is sort of an interesting kind of commentary and question. It's from Amy Perlmutter. She's been an advisor of some of NERC's and NRC's early REI studies, and her sort of comment is that she's never understood why we, and I assume all of you is what she means, or we, those who do these kinds of studies, only take credit for the percent of jobs that relate to the percent of the recycled input. If the industry needs recycled input, even if it's only 50%, we should take responsibility for all the jobs, not 50% of them. Hold on a second, let me finish reading this. Just skipped ahead. I know it's not that cut and dry. Perhaps if they could substitute virgin for recycled, then they could only use percent of the recycled content for jobs. But if they are dependent on recycled content for the manufacturing, and it's designed for a specific percentage to take their product, like perhaps steel, maybe we should take responsibility for all the jobs since they depend on recycled content, no matter what the percentage. Thoughts?
This is Lynn. Can I, Nora, can I just interject? Amy raises a very important point. When NERC did its first REI study, it did exactly what Amy was saying. It didn't give full credit, but we got a lot of nasty feedback as a result. And when we did an update, steel was counted as 100%, because that was the one industry that we were counting where that was exactly the point. The furnaces can't run without recycled input. But we didn't have any other industry at the time anyway that we were aware of that was true. So we did in our update draw that distinction. Steel got 100%, but not the other industries. But I don't know if there's been evolution at this point where there are more industries that one can point to that is 100% dependent on recycled feedstock.
Lynn, it's funny that you mentioned steel, because that was the first one that came to my brain too. Because I'm in Colorado, we do have a steel mill here in the state. And agreed, they can't, without any recycled inputs, they don't operate. There's some recycled inputs into all the steel they manufacture. So I think you can make a strong argument for that one. Gosh, Amy, it's an excellent question. And I think that's where some of the squishiness, in my opinion, comes in these economic studies. We tried to do some sensitivity analysis in ours, just, go up and down X or Y percent, because that's hard data to get, and there is a little bit of intuition or a little bit of guesswork in there. It's like, what portion of this is directly due to recycling? And maybe that'd be a kind of fun study to do. Let's say 100% of it at that NAICS code is recycling, and see what the difference is. I think in other ones you can make a clear-cut argument that's not, right? I ran the recycling programs at City and County of Denver, and we had staff in solid waste department that if you just use that NAICS code, you would include people that are picking up, we had like dead animal patrol that go out and get the raccoons that got ran over. And I would think you shouldn't count that staff as a recycling staff, or people that went out and did graffiti control. So definitely, I think you do have to discount those NAICS codes by some percent, because not everyone is doing recycling related activities. But I think you can make the argument that perhaps that number should be higher than we're using. That was great. I don't know what Brett and Lawrence think, but that's a really fun question, Amy.
Go ahead,
I think like the indirect activities try to get at that a little bit, just because that's looking at upstream supply chain economic activity, looking at how that impacts even like electrical utility companies that provide like electricity to the recycling facilities. Like Yuri was saying, we lack data on some of that, so it's really hard to model. And also when you're modeling, there's only so much that you can kind of put into the model to directly account for, as opposed to trying to get all the information from like a set framework or set parameters. So yeah, I think the indirect activities tries to get at that. Obviously, it's not fully adequate to capture all of that. There is, in the REI methodology document, we have looked at doing some sort of like recycled content approach, or like a recycled content in the final demand approach. We didn't do too much research into it, so I just took a look at it. It's on our website, but the approach estimates the direct and supply chain economic activity attributable to recycling based on the recycled content of final products consumed by households. And under this approach, for example, the number of employees directly and indirectly associated with recycling activities in the upstream supply chain is allocated proportionally to the recycled content of an automobile in the automobile industry. So, I mean, the big reason that we haven't done a recycled content approach is because we don't have the data for it. And what data is out there is old. So that is something that we'd like to look at for REI, but it is a good question. I think the best we're doing right now is with the indirect activities.
Brett, do you have anything you want to add?
Try not to repeat what they say, because what they said is correct. It is a marginal employment that we're doing for every dollar spent. How many jobs are created. And so a household goes and buys something at a grocery store. There's a fraction of that person that works at that grocery store that is because of recycling, because that person was paid with recycling dollars. And so that's how the models are attempting to quantify these jobs and the impact. It is a macro approach. On the micro approach, you can do it more finely, more detailed, because you know your own company and the percentage of recycled versus primary materials that are being used. So you can know whether that person is going to be working with the recycled product or the primary material products. So micro, you can hone in on it more. Macro, there's a little bit missing, as the other two described.
Okay. All right, this is a question, I think, for Yuri. Maybe it's a quick answer. We're beginning to run out of time. What percentage is the residential sector of the total MSW generated in Connecticut? You know that?
No, that's a good answer. We looked at the MRF throughput in tons, and getting back to that Connecticut deep data and recycle CT that Show was talking about, and I believe across the MRFs it was about a 60-40 split. And then when we did employment for collections, it was closer to 70%, and the hauler side is doing res versus commercial. But yeah, it was kind of, that was another squishy number that we did a couple different scenarios. It varied by NAICS code activity and where in the supply chain you're looking at it. But yeah, some of that stuff is in the report that's available on Recycle CT's website.
Okay, thank you. Brett, this is for you. Can you clarify activities, what activities you guys consider C&D recycling in your report?
I think that might be a question for Lawrence. He used the C&D activity in his report.
Okay.
Construction demolition, I think those are things like asphalt, pavement, recycling, basically any like cement, and like to any sort of like construction material recycled for like a new building. I know asphalt, pavement. I can do a quick look. I mean, it's on our site. I'm not a C&D expert, so I'm not sure exactly every activity, but it is outlined in the report. But I know that those are a couple of the activities that it includes.
All right, I'm going to do a very quick question, see if you guys have any answers. I can see that Lynn is putting up the final slide. Has there been any analysis regarding job development and wages in communities designated as environmental justice communities? Are you guys aware of anything that's been done like that? Yes, no?
I'm not.
Not specifically.
No.
Okay. Unfortunately.
Great question though, and maybe there is something.
Yeah. Okay. All right.
Sorry, I'm thinking. I don't know of any that focus on that. I think that's another difficult thing to research. But I mean, our administrator is very, very big on environmental justice, and so that's something that we're looking into. Probably for the next iteration of this report if we can. But that's a hard thing to economically analyze. So.
Well, thank you so much, all of you. This was great, and really appreciate your presentations and your questions. Lynn, take it away.
Sure, if I could find my mic. Again, I thought it was fascinating. Thank you, everybody. Thank you to our sponsors, Quantum Biopower, Tomra, Vanguard Renewables, and Bronze, sponsor of the Mattress Recycling Council. As I said, the recording, the presentations, and the elusive handout will be posted on the NERC homepage and on NMOA's website. And really appreciate everybody's engagement today and the great conversation. So thank you and have a wonderful balance of your day, everybody. Take care. Bye-bye.
Thank you. Bye-bye.
Thank you.